Here's an easy way to understand what moves the market. If more people buy than sell, the market's going to go up. If more people sell than buy, it's going to go down. The other day, our 14-year-old twins were going over some supply and demand graphs in their economics class. And I thought, this is a perfect example to explain what happens in the stock market. If you guys remember those graphs, trying to find the equilibrium price that something should be put at to balance out supply and demand, that's essentially what the stock market is doing every single day. Now, whether it's money chasing the overall stock market via the index fund like we've seen the last few years, or money chasing things like GameStop, that's essentially what's happening. When more people buy than sell, it's going to go up, regardless of what the story is behind it. Now, I've been doing this for 25 years, and it's really as simple as that. Too many people are always trying to explain why a stock or the market is moving and what that means, and they want to have the story behind it. But at the end, it all comes down to what happens. Where is the money going? Now, Wall Street controls pretty much all of the capital in our world as far as the markets go. And so they do a ton of research, and combined, when they decide to buy something, it's going to go up. But the way it works is they start with their largest clients and they start allocating money to those things. Or if they're selling, they start taking money out of it, starting with their largest clients first. And so at SEM, we're humble enough to understand, look, we're not going to be able to out-research Wall Street. There's just too many smart people out there. But what we can do is we can monitor what's happening through the use of technology and through all of our tests that we've done on the different asset classes to determine when is Wall Street buying and what are they buying, or when are they selling and what are they selling. And that's been the key to our success for the last 30 years. Now, let's go back to last February. Now, a year ago, hardly anybody was thinking much about the coronavirus. I know I was. I'd read a lot about it. I'd seen it because I read Wall Street research. And by mid-February, we saw some certain asset classes start to trend lower. So we knew through watching our trading systems that Wall Street was getting concerned about something. And if you look at our lowest risk models, by the first week of March, all of them had completely exited. Not because we were afraid of the impact of coronavirus or anything else, but simply because Wall Street was getting concerned. Fast forward to mid-April, and Wall Street, at a time when everybody else was extremely negative about how much damage the virus was doing both to our country's health as well as the economy, yet they were telling people to buy, and we started picking that up in our trading systems, and we started getting back into the markets and some very high risk things. And 2020 ended up being a very successful year for SEM when you compare what we did versus the benchmarks for pretty much all of our models. Now, let's think about where we're at today. Obviously, we see some meme stocks that are going up like crazy because they were mentioned on Reddit, but we've also have seen a market that seemingly will not go down. They are all expecting a great economy, fantastic things to happen with the vaccine. I hope they're right, but that has nothing to do with the way SEM manages money. What we're going to do is we're going to watch the money movement inside of Wall Street of what's happening. If we start to see things at Wall Street exiting, we're going to look to get out. But if things keep chugging along, we're going to keep riding along. We are comfortable and humble enough to know that we're not smarter than what's happening with the market. And I would encourage you to take that same humility. If you aren't in a position or don't even know what your plan is, I'd encourage you to reach out to your SEM financial advisor and see if there's a way that maybe you can get a second look on your portfolio and see if there's ways that you can be prepared for whatever the next crisis is.